Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
And they said to me, Andrew, if we were to invest in a robust income generating portfolio, how in the world are we going to be able to stay up with inflation? I hear that over and over and again. And then not only with that, but then people, how many times, Daniel, do we hear, oh, should I buy gold? I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we're talking about surviving the chaos. In AAA, people, the world, it seems like there's more chaos than ever. And I guess there's not, because if you look back and read through history, people are talking about the exact same things going on. But in our lifetimes, this is up there with the most chaos that there has been, between wars going around the world, uncertainty in the government, uncertainty with people's employment, all these types of things. There's a lot of chaos happening right now.
Well, you're absolutely right, Daniel. But I've lived a lot of years. I lived a lot of decades. I remember the Vietnam War. Believe it or not, I remember the Vietnam War. I remember fallout from. My mother wanted a bomb shelter in the basement of our house. Fallout from World War II. And then, moving forward into the tumultuous later 60s with RFK and Martin Luther King and JFK in the early 60s being assassinated, that, there's nothing like the assassination of a president that throws a nation into chaos, right?
Yes. Yeah.
And but today, every much is powerful chaos. And I think back, one of the more recent times in my mind, I just think about, the emotional turmoil that was caused in my life, in 2008, 2009, when things were happening. And, you were coming from a different vantage point. I don't know what your view on that was, but that really, looking back, was really something, right? And so we have a lot of this stuff, but you're absolutely right. That's the whole thing. History repeats itself. History repeats itself because people are the same. About the time one generation forgets the lessons forgets what one generation went through, the other generation makes those same mistakes from that standpoint. And so, now is no exception. We have chaos. But it seems like it's just mounting and mounting and mounting. In my opinion, it is mounting because it's working toward what the Bible talks about, the end times. And it's just, as a world, we get more away from how God had created it into our own ways of doing things, or we're left to our own devices and we create trouble for ourselves. So it's, how do we survive? How do we survive? And I know there are a lot of people out there that are wondering, and they think, oh, gold's the answer to surviving. And they think, what am I do? Oh, the stock market, I got to stay up with inflation with the stock market. And it's like, there's different ways of doing these things, folks.
Yeah, exactly. And what have we seen when there's chaos? We've seen the governments around the world, they need more money. And when there's chaos happening, there's something that benefits tremendously from that. And there's people who are stolen because of that. And so we could look in we could look at the Great Depression when they confiscated all the gold and they repriced it. It was unconscionable to think about that. But that was a way of debasing money. And that was the only way to debase money at that time, because money was backed by gold.
Yeah. Yeah.
So they took the gold, they repriced it, and they debased money because they just made up a new number for gold pricing. Right. And then in 71, we came off the gold standard. So that was a partial default or a partial debasement. 71, we just came off the gold standard completely, and it was temporary, or it was, this is not going to be how it is. And then after that, what ends up happening is when we talk about 2008, they figured out, well, our money is not based off of anything, so we can just create money. We can make all these new programs that will create money, and it won't create inflation because it's just balance sheet. We're moving balance sheet things around. But what did it do? It caused asset inflation from 2008 all the way up into 2020. And in 2020, we had this pandemic, the economy shut down, and the economy fell apart. The markets, people may forget, markets came down 40%, and they had to do a new print. And this print blew away the amount of money that was spent in 2008. It was not even close. It was just an insane amount of unfathomable amounts of money that just was created out of thin air. Right. This time, though, they gave money to people, and it caused inflation. It wasn't just asset inflation this time. It was both monetary inflation and high street inflation. And so the people saw the cost of goods go up. They saw eggs go up.
Right.
And so in a world of chaos, we know chaos equals money debasement or money printing. So in a world of chaos, how do you protect your retirement, your nest egg from the money printers? That's what we're talking about today, right, AAA?
That's exactly right. We want to be, we are very keen at being defensive, but also offensive in nature. And we got some alternatives for people today on the show. Really excited about today's show for what it's going to be able to do for people and how it's going to be able to help people. And you're absolutely right, Daniel. But the one thing I want to say when chaos happens, and it's all about the money. It's all about the money, but the money is not the most important thing in the world. The most important thing in the world is relationships. And money is just a tool to enhance relationships or to control relationships is what the governments of the world do with it, right? But we have to recognize that when all is all and all things come to an end, right? That, the only security there is God's security. And that's the most important thing, relationship with God. So, today you're listening to Financial Strategies with Andrew and Daniel Agemy. And today we're talking about surviving chaos, the strategies to protect your money from the money printers. And, we want to be able to help you protect your nest eggs from money printing. There's, which is debasing it, et cetera. We have some papers. We have some things that we like to give to you today. The first one, what we're going to start off with today is a commission report that we put together called 10 Signs You're Working with the Wrong Financial Advisor. You're going to see as we talk about things today that there are different ways to doing things when it comes to your money than what 95% of financial advisors out there do. So probably I would, if I were a betting man, I'd bet that most of the people listening to the show right now have the wrong financial advisor. And I'm not saying that we're the right financial advisor, because we're not. We're not the right ones for everybody. Okay. I'm just wanting you to be able to be educated, to be able to make a smart decision when it comes to having the right advisor. Because how many advisors does it take to ruin somebody's portfolio or their retirement? One. And whether that's you as a do-it-yourselfer advisor or you're going to somebody else, but here's 10 signs of working with the wrong financial advisor. And you can have that for free by calling us at 800-725-7616, 800-725-7616. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. We want to be able to help them and educate them to make smart decisions. Surviving the chaos, strategies to protect your nest egg from the money printers. So Daniel, I'm really excited about this show because we're talking about. I'm going to let it out of the bag right now. Right. From the standpoint of we're talking about streaming and royalty companies today, folks. Some of you out there in our audience have been questioning streaming and royalty companies, and we haven't really dedicated a show to them. This show is essentially dedicated to royalty and streaming companies. And you're going to find out that this is the alternative income investment that can help your money to do 2 or 3 times what other inflation is. And so I don't want to let it all out of the bag, Daniel, but that's what we're talking about today, folks. And this is going to be a real good show. And so where do we go from here, Daniel?
Yeah, well, we have, this is by popular demand. We've had a lot of clients asking about these things and how to protect themselves from the money printers, for lack of a better term, right? There's not actual money printers anymore. It's just keys on a keyboard that they just make it up. But
digital.
It's a nice picture to think of Jay Powell up there, like with the thing printing money right off of the stage, right? But right. We're more sophisticated than having to print it like in Weimar Germany and things like that, where they just had pallets of money. The inflation was so bad, they'd have pallets of money dropped off to pay the workers. Yeah. And by the end of the day, that money was no longer worth anything. They needed more pallets. Or there was, you see pictures of wheelbarrows full of money. That they took to buy a loaf of bread.
People running out to the fence and pushing the money through the fence to their loved ones so they could go to the store and buy a loaf of bread before it went up doubled in price.
Exactly. So there's no more printing of money, but it's just it's asset creation. It's just zeros and ones, right? They do it digitally now. But
not to be confused with digital assets, though. But go ahead.
Right. When we look at money debasement, and the longer you live, the more you realize it. Because when you're a kid and your dad says, "I can't believe a Coke costs $2," you're like, "Yeah, a Coke costs $2." Like, that's your perspective, right? The Coke costs $2. Or when grandma says, "I remember when gas was 29 cents." Right. And you say, well, what's the matter now? Gas costs $3 or whatever it is at that point in time. Right. But the longer you live, you realize, oh, that wasn't just grandma. Oh, that wasn't dad. Now I'm doing it. And younger people now are starting to say that. And why is that? Because the debasement, or another word for it, theft of your money, is happening faster and faster because it's spiraling out of control. And more people are starting to realize that. And more people are looking for answers how to protect themselves. And you hear things about buy stocks, buy the S&P, buy gold. And we're here to talk about other things that have done historically much better than those.
Great. And we're just running through this. It's time for us to take a break. But, before we do, I just wanted to give this illustration. I was talking to somebody very recently, Daniel, talking about how when I first started working, minimum wage was $2 an hour. And whatever it was we were talking about was like $8. Oh, it was a CD. It was a 8-track tape player, which is really interesting. That's the whole conversation was really interesting. But it was 8-track tape. And the 8-track tape in the 70s cost like $8. So I'd have to work 4 hours to buy an 8-track tape. Today, what's minimum wage? $15 an hour. And, so 4 hours today is $60. Is that same kind of purchasing power. Now, they don't have 8-track tapes, and technology is different, so things don't cost as much from that standpoint, from that angle. But the point is that $8 in the mid-70s is the equivalent of, from my seat of the pants standpoint, equivalent of $60 in today's dollars. And like what you're just saying, 29 cents a gallon versus $3 and change. But how do you there's one thing is just staying up with that. Another thing is getting ahead of that. And that's what we want to talk about today, is getting ahead of that. And we have a book that we'd like to give to you today. You listen to Financial Strategies with Andrew and Daniel Agemy. And today's topic is surviving chaos, how to protect your nest egg from the money printers. And in order to help you with that, we want to get you back to the very basics with the book that we have to offer today is just very simple, old book, The Richest Man in Babylon, classic book. This is a book that was put together in the 30s from scrolls and things that they found from Babylon, whatever, a long time ago, thousands of years ago, not millions, thousands. And it's how the richest guy, actually, I guess it was first published in 1926, but there was this richest man in Babylon, and what he did was he gave wisdom to the people who didn't have money. And we like to give this to you because this gets back to the very roots, the fundamentals, and the basics of staying ahead of inflation and ahead of taxation and those kinds of things, investing your money properly, and goes along with the paper we're given today is how to understand if you're with the wrong financial advisor. You can have this book for free by calling us at 800-725-7616, 800-725-7616. Call now for your free copy, and we'll be back after this. 800-725-7616. Call now.
Time for some tough questions for these financial advisors. What makes retirement income source different from other financial?
Our extensive experience generating investment income quickly so you can have financial peace of mind, navigate your retirement smoothly, and have more time to spend with family and doing the things you love. Honey. We gotta talk to these guys. We're done here.
This is Financial Strategies with Andrew and Daniel Agemy.
AAA, it's hard to understand what values are, right? What's worth what. But they say that if you went back to biblical times, if you went back to the 1920s or today, let's say we got a time machine and we hop back and we went back to biblical times and we wanted to get a fine suit, whatever they wore in the day, a fine
robe
suit
or whatever. Yeah.
It would cost about an ounce of gold. And then we hopped back in our time machine and moved up to the 1920s. And it was about an ounce of gold to get a nice suit of clothing. And today, if we look at about gold is probably around $33 an ounce, $3,300 an ounce. What would it cost to go get a tailor-made fine suit of clothing today? Probably very similar to that
give or
price.
take.
Now, we have inflationary factors that involve in there, or technology factors and entrepreneurs trying to make things cheaper. But I would say that throughout time, a fine suit of clothing costs an ounce of gold. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Surviving the chaos, strategies to protect your nest egg from the money printers. And it's been a while since we come to you today. Glad to come to you today. For those watching on YouTube, I've got a beard today. And, I want to tell you about my 5-year-old granddaughter says, now he's really a grandpa. They call me Grandpa Ice Cream because I like to give him ice cream every time I see him. Now he's really a grandpa because he's got a beard. And, the reason for that, just to give you insight, I had my knee replaced recently here and had a blood clot with that. Everything's healing well and whatnot, but I'm a blood thinner, so I don't want to shave yet in case I get a cut. I don't want to have that be bleeding all over the place. So anyway, glad to be with you folks today. And Daniel, glad to be back with you. But yeah, fine suit of clothes. People say, well, I could get a suit for a couple $100 or $400 or whatever. We're not talking about one off the rack and
one made in China, right?
Yeah, right. We're talking like a U.S. made or thereabouts, or
Italian made.
Yeah, something like that, fitted for you by a tailor, that kind of thing, which is what they did 100 years ago. And so I agree with you, Daniel, and people don't always recognize it in that because, like you say, technology and advancements and whatnot allow things to be done cheaper. So that's why you're able to get a suit today for $200, $300, $400 but it's a cheaper made suit. People say, well, that's fine with me. Well, that's fine. That's not what we're talking about. We're just talking about apples to apples. So
when we look at gold's history, right? Some people think that's the way to protect your money. And we're not going to get into the whole thing with gold and how to use gold. We're using it as a proxy, right, for inflation. If you look at gold and you look at the Fed balance sheet or you look at the money supply of the U.S., you can put the charts on top of each other and they look exactly the same. Gold typically sniffs out monetary debasement before it happens. How did it know there was going to be all that monetary debasement or money printing in 2000 after the COVID? Gold knows somehow, and it started going up before that even happened, right? Because basically gold hadn't done anything. 2011, it had a huge run up.
Yeah.
It hit almost 2000 or it hit $2,000 an ounce. And then it basically had another run up in 2000 around COVID, and then it didn't break out until basically 2023. So it did nothing, and that's why Warren Buffett just says it's a useless pet rock, right? and since then though, it's basically just straight up since 2023, right? So the last 2 years, it's kind of just straight up. So a difficulty, it's sniffing out monetary debasement to come. It knows that in this chaos, there's going to be war, there's going to be something, there's going to be more money printed. Right. The U.S. government has, or us, the U.S. has almost $37 trillion of debt, and we run basically $2 trillion a year of deficits. That's without a recession, that's without a depression, that's without another war. So where's the money going to come to fund that? Well, we know that it's going to be debasement. And we've spent a lot of time today going into setting up for how you can protect yourself from that AAA. But I think it's really important to set the stage because people understand this intuitively. People see it. People say the right things. What's my money going to buy? But I want people to at least have a little bit of a grasp of why that's happening. It's because we live in an inflationary world. The fact that the debt is getting so big, there has to be inflation so that the debt can be paid off. Because if we lived in a deflationary world where technology makes everything cheaper, which is how it actually works, technology makes things cheaper, entrepreneurs make things cheaper, the debt would never be able to be paid off. So there has to be this inflation every year. And people get used to saying there needs to be 2 or 3%. That's normal. It's not normal, guys. It's not normal, folks. It's theft. It's theft. But that's what has to happen to pay off the debts because we don't do debt jubilees anymore like they used to do in biblical times.
Oh, Daniel, that's good. I want to talk about Luke 16 after I do this, because that's exactly what Luke 16 talks about. Hey, you're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know, and a lot of people are not listening to this show, but you are, and you're going to have a leg up on the information that you're going to get here and now, because we want you to be able to make smart, wise decisions. And without knowledge, without wisdom, without understanding, you can't do that. We want you to have understanding. That's what this is about. We have a paper to put together today, commissioned report that we like to give you to be able to help you learn a little bit more than what we're giving to you on the air today. 10 signs. We're going to call it 10 signs. 10 signs that you're working with the wrong financial advisors. As I said earlier, probably 95% of the people listening to this show, I got to believe, are with the wrong financial advisor. Either you're doing it yourself and you don't know how to do this stuff right. Yeah, maybe you're making money, but that's an offensive measure. What I find, a lot of do-it-yourselfers are great on offense, but they don't have a defensive coach, and they need a defensive coach. And so that's what this paper will help you understand a little bit better. We'd love to put it in your hand for free by calling us at 800-725-7616. 800-725-7616 for your free copy. 10 signs that you're with the wrong financial advisor. Ask for it by name. 10 signs. All right. Now, listen, for you folks in our listening audience, we realize that we've had some technical difficulties here. And I know that some of you have called asking for papers, books, and things like that. And for whatever reason, those have not gone out. So listen, if you want that stuff, please let us know. And we're trying to reach out to everybody, make sure everybody's covered properly. But be aware of that. And we're here. We want to educate you to be able to make smart decisions. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Today's topic is surviving the chaos. Protecting yourself, strategies to protect your nest egg from the money printers. And we've been talking about gold, and Daniel was just talking about money debasement. And that's basically what happened in I'm pretty sure it's Luke chapter 16, where Jesus told the parable of the steward, who the owner came and said, hey, you cannot be my steward. You're not going to be my manager. I'm going to be firing you. And so then the steward says, oh, I'm too weak to dig ditches. And I'm too proud to beg. So what am I going to do? So he said, hey, here's this note. You owe my master 100 bushels. Write down 50. And hey, here, you owe my master a herd of sheep, or here, write down half a herd. And so he did this, and why he did that was to build friends for himself, so that when he was kicked out, he'd be able to have people to be able to take care of him. So he bought new friends, and that's what Jesus said in there. He said how wise that guy was to use worldly mammon to buy friends for himself, or at least that's what Jesus commissioned us to do. But the point was that he stole from his master. And he took 100 that was owed his master and told them to only pay 50, and he'd write it off. And that's what our government is doing. And that's what things are happening all around the world with. And unfortunately, there's no way to stop that beast, but there's ways to keep up with that whole situation. That's what today's show is about, right, Daniel?
Yeah, exactly. And we'll get into, we have two major points where you can really protect yourself, strategies you can use to protect yourself from the money printers. And so if we talked about it, we look at gold and we look at money debasement, money printing, inflation, whatever you want to call it, asset inflation. There's all these different terms because different things react differently to these different types of things. It's an aha moment. If anybody knows what the price of their house was or housing was in the 80s and the price of gold in the 80s, and you see how many ounces of gold it would cost you to buy your house, and then you look at how many ounces of gold it would cost you to buy your house today, it's a fascinating experiment. And you can do that with a lot of different things if you're interested in that. But it's changing the way you think instead of these paper units that really have no value except the aircraft carriers that back it up, the U.S. military that backs it up, and what people have chosen as money, which is basically gold. So, so if we look at that, it's basically
let me just jump in here.
Unit.
Okay, no, 1 unit of gold to 1 unit of value
today, right? Yeah,
and what I want to say is, that's a huge thing for you and our listening audience to be able to listen to what Dan is saying with this. But the other thing is, so many times people will think the stock market has gone up, but it's really about the same, or maybe what would you say? It's even a little less, Daniel, than 1 for 1.
It's basically 1 for 1. If you take the S&P and you put it over like monetary, the monetary supply, you put it over money, it's basically the same chart. Yep.
Okay. So it's just an exchange of value. It's just an exchange. Who wants to make an exchange? I mean, why do people go into business? They go into business to make money. Why do you go to work? To get a paycheck, to make money. Why do you just want to exchange 1 for 1? Ideally, you want to leverage it. And 2 for 1, 3 for 1 is a much better thing. And that's what that's what we're talking about today. An alternative, somewhat more conservative investment than what most alternative investments are. So go ahead, Dan.
Exactly.
Okay.
Yeah. So if you do 1 for 1, which is what typically gold has done, typically the S&P has done, although, there's other risks involved. We'll just say they keep up with the money debasement. You want a leverage on that. You want 2 times, because then you actually have purchasing power. You didn't just keep your money the same.
Right.
You want 3 times, then you have purchasing power.
Right. And
some of these things that we're going to look at today, they're called royalty and streaming companies. Mm-hmm. And it's a business model that I think is the absolute best business model out there. It's incredible the way that it works and the way that these companies that we have used, you've gotten 2, 3, and 4 times the money debasement.
Right.
Over the last 10 years, 5 years, 2 years, whatever period you want to do. And it's awesome. You don't need this to be your whole portfolio. You just have it in there as a piece. And what it does is it protects you from that money printer.
Oh, that's good stuff, Daniel. And I got more stuff, man. When you talk, man, I got my brain's going, and I got more stuff to go. I'm going to come back after this next break and maybe start off with that. But you're listening to Financial Strategy with Andrew and Daniel Agemy. And whether you just joined us or you're a regular listener, we're glad that you're listening to us. And I think you're going to be glad and have value added. And to add value to do that, well, you're listening to Financial Strategies. Today's topic is surviving the chaos, strategies to protect your nest egg from the money printers. And one of the ways we want to add value to you to help educate yourself, very easy read book, The Richest Man in Babylon, we have for you for free. So just call us. We'll need to verify your information and such, but we'd love to put this book in your hand for free for listening to the show. First 5 first-time callers, 800-725-7616, 800-725-7616. Or if you've called before and didn't get a book for whatever reason, let them know that you didn't get a book previously, even though you called, and that will be great. We'd love to put this in your hand. You're going to learn some good stuff by this book, edited by George Clayson, and and many people have benefited from this. Call now, 800-725-7616, The Richest Man in Babylon. We'll be right back after this break.
Financial Strategies with Andrew and Daniel Agemy.
So AAA, you're getting ready to go to college and you don't know exactly what you're going to do, but we've been watching you and we see you're an intelligent guy, you're entrepreneur minded, and you've got some serious drive. And our job is to go out and find people that we think are going to succeed in life, that are going to do very well, that are going to build the next big businesses, that are going to be entrepreneurs, and that are going to create value for people. So I come up to you and I say, Andrew, I see you're trying to go to college. I'd like to advise you a little bit on your college. I'm going to help you. I've helped a lot of people do this before. And do you know what? I'm actually going to pay for your entire college, all expenses, books, everything, food, we got you. And all I want in return is 2% of your future earning potential, of your future assets. Okay?
Okay. All right. Wow, sounds
so
good.
You think about it and you say free college, mentor, everything like that. Great.
Right.
Great. I like it. Now, flash to today. Do you think I would have made money off of that deal?
Definitely. Hands down. Multiples.
You think it'd be a better investment than the S&P 500?
No question.
I'm Daniel Agemy.
I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is surviving the chaos. Strategies to protect your nest egg from the money printers. Should I buy gold or what? Should I buy Bitcoin? We're not talking about those today because those things, that's another show. We're going to have another show. Should I buy gold? But today we're talking about alternative investments that do exactly what Daniel just described. Go for it, Dean.
Yeah, and these things are royalty and streaming companies, and they work the same way I just explained, paying for the education, where you have a team of experts that all they do is focus on finding these deals, and the deals are all kinds of things. It could be silver mines, silver rights. It could be water rights, water mines. It could be land. It could be gold. It's typically precious metals. There's ones that do battery metals and things like that now too. They're getting more and more as people realize how this is probably the best business model.
Hey, and Daniel, one of the ones that we typically use, right, has several of those.
Correct.
Things. Water, land,
exactly.
Oil. Right.
Okay. Franco-Nevada is it's the gold standard. It's the gold standard for royalty and streaming companies. They kind of invented the model, or at least popularized the model. And the performance has just been insane how that has done. But now there's a lot of different ones. And so we have one like Texas Pacific Land that we've made a lot of money on that company over the past few years. And the idea is they own close to 1 million acres in the Permian Basin in Texas, which is one of the richest oil areas in the United States. And they don't do any drilling. They don't do any of the work. All they do is they do leases with people like Chevron and Exxon. Yeah. And they get a certain percentage of all royalty. They get royalties on all production that those companies do. And in the meantime, they have grazing rights for cattle, and they have water rights for people who need water rights, and it's a money printing machine, basically.
Right.
And
so they get, if we're using a 2% thing, they're getting like 2% for the water, they're getting 2% for the oil, 2% for the grazing, 2% for whatever else they can come up with on the property.
Exactly. And people would say, well, if they own close to 1 million acres in Texas and the richest oil part of the country,
right.
They must have a lot of debt, right? They don't have any debt. They have absolutely no debt. And the funny thing is, this company started out of a railroad bankruptcy in the 1800s.
No kidding. That's why it's Texas Pacific.
And that's where it came from. And they've built this model up and it's very profitable. It's expensive now, but if you look back, if people look back at the type of money that we have been made in this is what we're talking about. It's companies like this that you get leverage on the inflation because their land is going up in value, the oil is going up in value, right? All these things are going up in value, and so now people are really interested in gold. So Franco-Nevada, Osisko royalties, some of these things are ones that focus primarily on gold, although they have other streams as well. And they don't need big teams. It's not a mining company. That's where people get confused. A mining company has all these expenses, and people say they do really good. They're good in inflation hedges. But if inflation goes up, and dump trucks are more expensive, and fuel is more expensive, and employees are more expensive, and lawsuits are more expensive, and the EPA is giving you a harder time, and this and that, it's hard to make money even in inflationary times. These royalty and streaming companies, just like when I explained the education, you just paid for that education one time.
Yeah.
They buy these streams of the royalties, and we can get into what each of those things are, but they buy these, and it's a one-time expense. It's very low risk because that's what they do every single day. They look at these deals, they understand the deals, they pass on the deals that they don't want to do, and they keep the deals that are interesting to them.
Nice. That sounds really good. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is surviving the chaos in the world today, right? Strategies to protect your nest egg from the money printers, because money printers equal debasement, equal basically a form of stealing from you. And that's what we talked about earlier in the show. But today we have a commission report we love to be able to put in your hand and helps you understand things even better. And we haven't talked about this yet, but we're going to be talking more about this coming up here, but we're giving away now, understanding Roth IRA contributions versus Roth conversions. We love to put this in your hand. It's going to be one of those ways, a tax efficient way to help survive the chaos. Right now, we're talking about this alternative investment to help survive the chaos for investments. But then there's also the registration of your investments that is important too. And we're going to talk more about that in a bit. But understanding Roth IRA contributions versus Roth conversions. Ask for it by name, the Roth IRAs. 800-725-7616, 800-725-7616 for your free copy. Call now. You listen to Financial Strategies because people don't know what people don't know. Daniel and I are here to work with you today to educate you so that you can have a leg up on your friends and neighbors, because Daniel, you're talking about these streaming companies, and you said we've made a lot of money on, this one particular one. And what would you say, that $1,000 investment that we've done, 10 years ago or wherever, when we first started doing it to today, if all things being equal, would that be $10,000, $20,000? What do you think? Shooting from the hip.
Yeah. It would be more than $10,000.
Yeah. So that's 10 times growth over roughly a 10-year period of time, which is, that's phenomenal. So cool. Good.
Yeah, which is insane to think about, right? And so, the thing people need to be careful with these is they do get expensive because people get euphoric, especially right now, because everybody wants to be involved with gold. And these are a really good play on gold because, like we talked about, you can get 2 or 3 times what gold does, right? Yeah. So if gold does that 1 unit, you're going to get 2 units or 3 units, hopefully, but they get expensive. And so these things, you need to be careful with them because they can get expensive. But in times like this, where there's all this uncertainty and gold is going up, this is an amazing way to protect your purchasing power. You just need to know the right ones to be in at the right time.
And that's where true diversification comes into play, is understanding that. And that's when, the commission report we gave away in the first half of the show talked about, are you with the wrong financial advisor, right? That somebody might say, oh, I'm going to go buy that company. And you could buy it, but that doesn't mean you're going to get the bang for the buck that you could if a professional that knew what they were doing was really doing something with it. Because talk a little bit about what you've done with that kind of stuff, Daniel.
Well,
if
we
you don't
talk,
mind.
so our clients who are listening, they'll know because we talk to our clients about this. When we talk about investments, we're not talking about hope strategies. We're talking about
Right.
direct contracts. You have a contract and then indirect contracts. Those are the types of things that we invest in. So the
Right.
contract being, you're going to lend this corporation your money. There's a contract that tells you exactly what's going to happen, how much they're going to pay you every year, and exactly when they're going to give you your money back. And it's an enforceable contract. And then there's indirect contracts. And an indirect contract is where there's a company and they have a contract with an entity and it's an enforceable contract and you own a bucket of those. So you don't own the actual contract, but you own the company that owns the contracts. So these are those indirect contracts.
Yeah.
So
okay.
the royalty streaming company goes out and they find these deals, they find these mines, they find these projects that want to grow, that want to increase their revenues, that want to expand, whatever that may be, and they work out a deal. And they are able to buy a certain amount of silver, a certain amount of gold per ounce at a set price. So
Yeah.
maybe they can buy, 200 ounces a year at $1,200 an ounce. Now, if gold is trading at 33 right now and they can buy 200 ounces at 1,200, that's a pretty good spread. And that's a contract that they have there. The other way is what we talked about earlier, where they say, we're going to get 1.5%, we're going to get 2% on all revenues off this venture, this mine.
Yeah.
Which means if the price goes up, the dollar amount of your 2% just got bigger because the mine is making more money. Or they might find a new
new vein or something.
a new vein,
Yeah.
exactly. And the mine expands. So there's different ways it could get bigger besides the price going up. And that's why one of the most amazing things about these companies is that they're compounders. Because we talked about gold did nothing from 2011 basically to 2023. Well, these things we just talked about, the returns they have got. So these have done double-digit returns, the good ones, over that period of time when gold hasn't done anything. Can you imagine their potential now that gold is taking off?
Right. Cool. This is good stuff, man. I'm excited. Let's buy some.
You already own some. You own a lot.
All right. You listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is surviving the chaos, strategies to protect your nest egg from the money printers. And today we've got a book we'd like to give you before we go to break. It's time. This show's just having a good time today, and the show just going by quickly. But we have a book we'd love to put in your hand to help you know what you don't know. The Richest Man in Babylon. Simple, easy read book. Whether you get it for your grandson or your teenager's son or daughter, whatever the case may be, or for yourself. Basic, fundamental money management skills that everybody should read this book. We love
time-tested wisdom, right?
Time-tested wisdom. This is this book was put together over 100 years ago, and it's information from thousands of years ago. So love to put this in your hand for free by calling us at 800-725-7616. The next 5 first-time callers, 800-725-7616 for your free copy of The Richest Man in Babylon. Call now, and we'll be right back after this. The biggest mistake retirees make is not switching from the growth model to the income model. You know, a good retirement plan is having enough income to last the rest of your life. Any problem in retirement, it can be solved with income. The biggest concern that retirees have is running out of money. The second biggest concern is that they want to grow their money so that they don't run out of money. And they think it's synonymous when it's not necessarily the case. People don't know what they don't know. And they're not going to know unless somebody tells them. People think that the only thing that they can do to grow their money is by investing for growth in the stock market. And it's very much a herd mentality. But you can only get growth when the market goes up. When they invest for income, they're able to get money no matter what happens. I'm Andrew Agemy, founder and CEO of Agemy Financial Strategies. we've been helping people enjoy stress-free retirement for over 30 years.
This is Financial Strategy with Andrew and Daniel Agemy.
If it's tax-free, it's for me. When is $1,000 a true $1,000? Well, when you're taking it out of a Roth IRA, when you take out $1,000, you're not taxed. So you get $1,000. Whereas if you take $1,000 out of your traditional IRA, you're taxed on it, and maybe you only end up with $700. That's egregious. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. And today we're talking about protecting your nest egg from the money printers, or surviving in this chaotic world, right?
Yeah, that's right. That's right.
So that's a real good point there, AAA, with your story, because you can make a lot of money. We've talked about some offensive ways of protecting your money from the money printers, but you can make a lot of money. Right. And how much money do you have? Well, number one, you have to solidify it sometime, because a stock can go up and down, and it can do all these things. Gold can go up and down. You could have all these gains, and 2 years later, they all be wiped out. So number one, there has to be something you want more than that stock, right? If it's lifestyle, if it's vacation, if it's a home, there's something that you're willing to trade that for that you want more. So number one, it has to be solidified, those gains. Or you have to be buying gold and you just know it's not an investment, it's an insurance, and you're holding it forever, so it doesn't matter to you. But we're talking about
a whole other
investments
thing
today.
Right. Yeah. Listen to our Should I Buy Gold radio show that we're going to be putting together.
Yeah.
Okay.
And two is, how much of that money is the government going to get?
Oh, that's the terrible thing.
Right?
Yeah.
What do you mean by that? Well, we don't know what capital gain taxes are going to be in the future, right? We know what they are today. We have no idea what they're going to be in the future. We do know that we're knocking on the door of $37 trillion of debt, which is unfathomable. There's no one in history, there's no country in history that's had anywhere near that. Two is, if it's in an IRA or something like that, you don't know what taxes are going to be either. And three, there's talks that continue to happen about unrealized gain wealth taxes. So you don't know what's going to happen with that. So the difficulty with making a lot of money is you don't know how much it's actually worth. AAA.
Right. And the one thing I want to add to that is, like you said, we don't know what tax rates are going to be in the future. But here's a key point I want to bring out to those who are married in our listening audience, that when one of you dies, you're going to be in a higher tax bracket. The survivor is going to be in a higher tax bracket. You're going to go from a married filing jointly to a single bracket, and the bracket is higher. And if you still have to take out required minimum distributions out of your IRA at that point, that you could be paying a lot more taxes down the road on your RMDs, required minimum distributions, than you would have if you put the money in after tax to start with. So that is an important thing to look at and strategize about, and have a holistic financial advisor that's looking at estate planning, looking at tax planning, looking at investment planning, looking at the whole picture, not just trying to grow your money.
Yeah, exactly. And so if you've got a 401k, you got $1 million in it, you retire, you move that over your IRA, and it turns into $3 million. Is that good or is that bad? Well, it sounds good, but the question is, what will $3 million buy you at that point in time? And number two is, how much is the government going to take when you want to use that money? Or if you don't want to use it and you want to pass it to your kids, how much is going to have to be paid when it passes on to the kids, right?
Right.
So one of our absolute favorite ways to protect yourself from the money printer, besides these streaming companies, is Roth IRAs, because to me, that's the best way to protect you from theft of inflation at this stage with the current rules the way they are and everything like that. This is a secret weapon. This is a superpower in my mind, to have this there where you can build it up, because now debasement means your asset value is going up, right? Yeah. Which means these royalty and streaming companies we've been talking about, if they get 2 or 3 multiple on debasement, it's going up, but you don't have to pay tax on that when it comes out, which is incredible to think about. The more you think about it, you're more like, this is a cheat code, right?
People don't know what people don't know, Daniel. And I know people that just heard what you said in our listening audience. There's a lot of questions going through their minds. I didn't think I could put any money into Roth. How do I get, and all these different things. But we wouldn't be saying this, folks, if there weren't ways to do it. Now, it may not fit you, may not fit everybody. That's fine. But there are ways to getting it in. And, we're giving away a commission report today that explains that in more detail. Understanding Roth IRA contributions versus Roth conversions, right? There's two ways of getting money into Roth IRAs. One is contributions. And in order to do a contribution, you have to have earned income to do that. And if you're already retired, you don't have earned income. Yeah, the money you get was earned, but that's not considered earned income. So you can't do a contribution. And the contributions are limited to $8,000 in a traditional or in a Roth IRA. Whereas you can convert, and there's no limitation to convert. We just need to make sure that the tax brackets are right. You don't get thrown into paying extra for IRMA on your Medicare premiums and all those other kinds of things. So there's a lot. Don't do that. Don't try this at home. But there's ways of looking at that to be able to get your money into Roths that we constantly do for our clients. We make no extra money on doing this. We do a lot of work for our clients. But in order to help them, because our goal, we work for them, we're true fiduciaries, and we want to make sure that they're going to be happy down the road, right? We have to answer not only to them, but to God for what we're doing to be able to help them. So that's the idea here. So you listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is surviving the chaos, strategies to protect your nest egg from the money printers. And we have this paper to give to you, Understanding Roth IRAs, Contributions versus Roth Conversions. And it's yours for free by calling us at 800-725-7616. 800-725-7616. I hope you call now ask for by name the Roth IRA paper, 800-725-7616. Because people don't know what people don't know. Daniel, these royalty and streaming companies you're talking about are just amazing companies. Like you said earlier on that, they're getting 2%, maybe 1% of all the profits, all the monies, the income coming into these companies. Yeah, the company's expenses are going up. Employment and labor costs are going up. Equipment costs are going up, and whatever else may be. But to these royalty and streaming companies that our clients own, the costs are not going up, the profit's going up. And so that can really compound. And, we talked offline earlier to where you said that could on average, these things are somewhere between 10 to 20, some are over 20% per year on average, some are below 10% per year on average, but generally speaking, double-digit returns on that. And they're compounding from the income being reinvested in them. Now, this is not a whole portfolio to do this with. This is one facet of a truly diversified portfolio, right? Right.
This is, as we wrap up here, this is strategies that you can use, and why we love these things so much. This is one of our offensive tools, right? This is Patrick Mahomes out there throwing the ball, right? This is one of the offensive tools that you mix with the amazing defense. So when we talk about, and our clients, again, they know about this because we talk to them about this stuff. They have the defensive portfolio where there's the contracts, right? Yeah. You know what's going to happen. We're not hoping. So when you invest for income and you invest by contracts, you have more income and less risk. And that's an amazing thing. The one place where that could get held up is the money printer, because if you just have no volatility, but things are going to the sky and a bond can't go to the sky too, you have one little chink in the armor. And so you mix these in with that, because what ends up happening is when liquidity gets sucked out of the system, and what I mean by that is in the Great Depression it happened, right? The stock market crashed, everything fell apart, stocks fell apart. Gold, what did gold do? And gold mining companies, they still went up. They still did good in the Great Depression, right? In 2008, what happened? It all fell apart, and then gold took off. And in 2000 when everything fell apart. What happened, right? So you see these things. So when you have the defensive that doesn't sell, that doesn't get hit hard because you have those contracts in these liquidity events, it all gets sucked out. You take the income or you sell those assets and you move into this stuff that sells off hard, like these royalty and streaming companies. It's a strategy. And then when the big print, when the money comes into the system and these things take off again, you're riding it up, but you didn't get the whole drawdown that everybody else did. Then you mix that with the Roth we've been talking about, and that all happens tax-free. And so that's a whole strategy that you can mix together. And the amazing thing is, as these get expensive, you take the profits, you take all the cream off of the top and you invest it in the income, because usually they're kind of doing opposites of each other. You put it in income, which builds your income, which pays for your lifestyle. And then when they get cheap, you take the income and you put it into them and you increase the portfolio value, and they work together really well. And when we've talked on all of our shows about correlated and non-correlated, you want non-correlated investments to protect you through different environments. This is one of those non-correlated things that we like to mix in with people's portfolios so that they have a strategy to protect them more than just market selling off, but it can protect them from the money printer as well. Right, AAA?
Yeah. Wow. I like it, Daniel. Pretty sweet stuff. I love what you do for my own personal portfolio as well as our clients' portfolios, and it's just amazing stuff. And I hope that I'm hoping that people in our listening audience will take advantage of that paper we gave in the first half of 10 signs that you're worth with the wrong financial advisor, right? Because so that they can get somebody, whoever it is, but understand what to look for in a financial advisor that's actually going to be able to help them to have the right defense with offensive mix, right? 95% of financial advisors out there and professional financial people are typically more offensive than they are defensive in nature. And that can, if you're in or close to retirement, that can be very problematic. Speaking about that, if you're in or close to retirement, I want to just tell you in our listening audience that, right now, it's important to be able to understand what kind of investor you are, right? If you're an aggressive investor, a conservative investor, or a speculator investor, right? It's important to be able to understand that and to define what it is so that you know how to be able to deal with your monies and investments. But, if you have an annuity out there, it's time to get a second opinion. The Federal Reserve, the government has issued a gift to anybody who bought a annuity, even as little as 2 years ago or longer, that where, you can increase your return, potentially lower your risk, increase your income for all these things without it costing you anything. But you need to be able to have a second opinion by somebody that is a true fiduciary that understands your situation and whether you need more income, you need more growth, or you need a combination of the two. And, if you're interested in a second opinion, we'd be glad to be able to talk with you about that, but that's up to you. But today, as we close up the show, Daniel, I'm ready to close this up and give away our book. Is there anything final that you want to say before I do that, or we're good to go?
No, just know that these are strategies, these are ideas that we want to bring to people to help them be educated. We've had a lot of talk about protecting people's purchasing power, and it's getting worse and worse every single year. The theft of your money. If it's sitting in a bank account, you're losing buying power every single day. And so think about these strategies, talk to your professionals. If your professionals don't know anything about them, we have special time for our loyal listeners that we can talk to them about individual situations, but get some advice and think about how these types of things can work to protect your nest egg from the money printer.
Excellent. Excellent. Good advice, Daniel. Appreciate that. Yeah. There's Bible says, Proverbs says that there's wisdom in the abundance of counselors. And so get the right counsel from people that have understanding and knowledge in the right areas and wisdom in the right areas. But we'd like to give you a book from a man or from the richest man in Babylon that called The Richest Man in Babylon, has a lot of good wisdom and understanding in regard to how to handle money properly and multiply it. And we like to give you that same information, educate you, whether you use it for yourself, you use it for your loved ones, or whatever the case may be. But very easy read book. Love to put it in your hand. 800-725-7616. 800-725-7616 for your free copy to the next 5 first-time callers. The next 5 first-time callers at 800-725-7616. And if you want to listen to this radio show, hit us up at agemy.com, agemy.com. The show will be on there that you can listen to in its entirety, or any place that you listen to podcasts. And again, it's called Surviving Chaos, Protecting Your Nest Egg from the Money Printers. All right. So we are glad to be able to be here, and thank you for allowing us to be part of your life, add value to your life today. And as you move forward, if you want to be stress-free, invest for the I more than the G. Until next time, peace.